Good day and welcome to the Q1FY22 earnings conference call of Lumax Auto Technologies Limited. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anmol Jain, Managing Director. Thank you, and over to you, sir.
Thank you. Good afternoon, ladies and gentlemen. A very warm welcome to Q1FY22 earnings call of Lumax Auto Technologies Limited. I hope you and your loved ones are safe and keeping healthy amidst these challenging times. Along with me on this call, I have Mr. Deepak Jain, Director, Mr. Vineet Sahni, Lumax Group CEO, Mr. Sanjay Mehta, Director and Group CFO, Mr. Vikas Marwa, CEO, Mr. Ashish Dubey, CFO, Ms. Priyanka Sharma from Corporate Communications, and Mr. Ankit Chakral from the Finance team, along with SGA, our Investor Relations Advisor. The results and presentations are uploaded on the stock exchange and company website. I hope everybody had a chance to look at it. Let me start by giving an overview of the industry performance. It would be unfair to compare Q1 of current year vis-a-vis Q1 of last year. Q1FY21 was into complete lockdown, while Q1FY22 was under partial lockdown, slowing down the economic activity and movement due to regional lockdowns, which significantly restricted the business in the months of April and May. We started experiencing normal business activities only from June onwards. Hence, it is more relevant to compare Q1FY22 with Q4FY21. As per data published by SIAM, in the first quarter of FY21-22, the overall industry production was down by 36% from Q4 of FY21. All segments faced major downfall. Passenger vehicles were down by 24%, two-wheelers by 38%, three-wheelers by 22%, and commercial vehicles by 41% from Q4 of last financial year. However, the industry has shown signs of recovery from July onwards, despite the volatility of commodity prices and chip shortages. We are confident of recovering the lost ground in Q1 in the remaining 3 quarters, assuming there is no stalling of activities due to a possible third wave. Let me now take you through the performance of each business entity. The standalone entity caters to integrated plastic modules, aftermarket business, chassis, swing arm for two-wheelers, trailing arm for three-wheelers under the metallic business, and two-wheeler lighting. The standalone entity has contributed 77% of the total consolidated revenues. Lumax Nano Allied Technologies, the 55% subsidiary which manufactures manual, AMT and AT gear shifter systems and has a market leadership position, contributed 14% to the total consolidated revenues. Lumax Cornaglia Auto Technologies, the 50% subsidiary which manufactures air intake systems and urea tanks, commanding 100% share of business with Volkswagen and Tata Motors, contributed 7% to the consolidated revenue. Lumax Metallics Private Limited, a 100% subsidiary which manufactures seat frames, contributed 2% to the total consolidated revenues. The company is confident of increasing the revenues over the next few years with the start of new launches in the current financial year. Lumax York Allied Technologies is a 50% subsidiary which is engaged in design, development and production of gear shift towers, automated manual transmission kits, all gear sensors and forks. The production has started to pick up as per the OEM schedules. Lumax Ituran is a 50% joint venture with Ituran Telematics of Israel. The revenue of this company is not considered in the consolidated revenue, being an associate of the parent company as per Ind AS. The technology landscape is changing rapidly in the automotive industry. We see evolution and adoption of information and communication related technologies at an unprecedented scale. A shift is happening towards electric mobility, energy efficiency, lightweighting of vehicles, and alternate fuel usage. In line with these emerging trends, our future partners should be experts in their field of technology with a history of innovation and product leadership. Our teams and technological partners help us design innovative solutions to offer localized solutions to our customers in the Indian market. On that very front, I'm very excited to announce our newly signed joint venture agreement with Alpine Company Limited, Japan on 2nd July 2021 for the manufacturing and sale of electric devices and components, including software related to the automotive industry. The company made two significant new launches during the quarter. In the passenger vehicle segment, the company provided ducts and air filter assembly for the Skoda Kushaq model under the Volkswagen Group, and in the two-wheeler category, made headlamps and tail lamps assembly along with other plastic parts for Bajaj's CT110X model. Your company was also recognized across different forums during the quarter. The Chakan, Chinchwad and Aurangabad plant of the company won gold awards in QCC competition held by Quality Circle Forum of India, and the Chakan plant of the subsidiary company Lumax Cornaglia Allied Technologies Private Limited won the silver award in the same competition. Lumax Mano Allied Technologies, the subsidiary company, won first position in the competition held by ACMA in customer complaint and best HR practices category, and the Aurangabad plant of the company won second position in the same ACMA competition in productivity improvement Kaizen category. At Lumax, we are well positioned to capture the growing market opportunity with a diverse basket of products and capabilities to better serve Indian OEMs. We constantly strive to unlock new opportunities and achieve operational excellence. Now, I would like to hand over the line to Mr. Sanjay Mehta, Group CFO, to update you on the operational and financial performance of the company.
Good afternoon, everyone. I will update on operational and financial performance of the company for Q1FY22. Operational highlights: the integrated plastic modules contributed 26% to overall revenues, followed by chassis at 21%, gear shifters at 14%, lighting products at 13%, aftermarket at 13%, emission at 7%, and others at 6%. Two and three wheelers contributed 48% to the overall revenues, passenger car at 21%, aftermarket contributed 13%, and CVs at 9%. Revenue stood at rupees 260 crores as against 388 crores for Q4 FY21. The revenue for Q1 FY21 was at 71 crores. The company reported EBITDA of rupees 19 crores and profit after tax and minority interest of rupees 3.4 crores in Q1 FY22. We incurred capex of 2.4 crores during the quarter. Now we open the floor for call for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Abhishek Jain from Dolat Capital. Please go ahead.
Congrats for decent set of numbers in a tough time. Sir, strong traction is coming in the two-wheeler EV segment. So how you are preparing yourself to leverage this opportunity? Which all products are you looking to supply in EVs and lightweight side?
So thank you, Abhishek, for the encouraging comments. So on the EV space, I think our view is that it will still take some time unless and until the electric vehicle is able to penetrate into a wider share of the total two-wheeler market. We still feel that, yes, it will penetrate faster than the passenger cars, but the ICE engine will still be the mainstay for quite some time. However, the good part is that there is no component in the current portfolio which gets affected or is at risk of deletion under the EV space. We have also made some further progress in acquiring certain businesses on the EV models in the current quarter. And I can only say that, again, our strategy of electronics and plastics footprint to grow in the future will also go a long way in helping us serve some of the two-wheeler EV models.
Okay, sir. Sir, you have won the gear shifter, lever assembly, and the urea tank order from the CV segment. Although this business is quite small right now, but I wanted to know what is the revenue visibility for the next 2 years from these two products, especially in the CV segment.
So if you look at the gear shifter specifically on a full year basis, the company did approximately 125 crores of revenue in the last financial full year. I think we do anticipate a strong growth in the current financial year, mainly because of the technological changes, because going from MT to AMT or AT, also to get into a better wallet share in few of the customers. So for those reasons, we do see a good growth in FY22 on the gear shifter business. Coming to the urea tank business, I think because of urea tank, Lumax Cornaglia as a company was perhaps only a company which still showed a growth in the positive territory last year, despite Q1 being under lockdown. And we have good engagement and an order book for the future on the urea tank. So we do expect this to grow as well. I would not be able to give you accurate numbers of the next 2 years because there is a lot of uncertainty and volatility still. But I can only share with you that both the products have a good order book and are looking at a promising growth in the coming 2 years.
So how much realization per unit in the gear shift lever business right now?
So the gear shifter, in terms of you're talking about per vehicle?
Yeah, per vehicle realization.
So approximately on a manual transmission, let's say the per vehicle would be anywhere between 350 to 500 rupees, depending again on the model. But as I said, the technology is changing more rapidly towards the 80, and we do expect a significant 3x to 5x multiplying effect on the per vehicle revenue the minute we go to the 80 technologies.
So what is the contribution of the 80 in overall portfolio right now?
Right now it's about 20%. About 80% is still empty.
Okay. Sir, in aftermarket business, basically we have seen a sharp degrowth in this quarter because of the lockdown. And although that in FY21 it was quite strong. So just wanted to know that what sort of the growth you are looking from this segment in the next 2 to 3 years, where the base is quite high, and what would be the key driver?
The aftermarket as a segment, because of regional lockdowns, did get severely impacted in Q1. However, I'm very happy to share with you that in the month of July and let's say partial August, in the last 45 days, there has been also a very sharp and steep recovery in the aftermarket since the retail markets have now opened up. We are probably back to our Q4 revenue levels in the aftermarket, looking at July month standalone. Giving you a broader perspective of the long term, I think I have always maintained that over the next 3 to 5 years, we would definitely like to double our aftermarket portfolio in terms of revenue. The company does accept and is cognizant of the fact that aftermarket is really a better profit margin earner for the company as well. And in line with that strategy, I think the company has ambitious plans of launching new products, both with the current set of segment as well as getting into new product lines to increase our footprint across India and increase our revenues of the aftermarket in the next 3 to 5 years.
So which all products you are going to introduce in aftermarket? Can you throw some light on it?
So there will be many products. There are many products under feasibility right now. But first and foremost, we have gone into automotive mirrors as well in the past. We have also gone into electric horns and cable assemblies, also some plastic painted products. So these are some of the new product segments which we have entered into. Of course, having said that, we have also expanded our model range within the lighting segment, which still contributes significant share of the total aftermarket business. And going forward, we will still keep on evaluating and launching new product segments which make business sense.
So how is your tie-up with Lumax industry? Basically, you trade, you take some products from the Lumax industry and sell it to the aftermarket. So how is your tie-up with this Lumax industry in terms of the margin and all?
So Abhishek, this is Deepak Jain here. Let me just come in here. Basically, in terms of Lumax Industries and Lumax Auto Technologies, there are certain products which Lumax Industries would supply into Lumax Auto Technologies, both being listed entities. They basically come under arm's length and transfer pricing restrictions. So we are very cognizant of that fact. And also, as Lumax Auto Technologies, as Mol just said, they would basically, depending on the expansion of market and products, would also be sourcing from basically other suppliers. So that's a similar relationship which Lumax Industries would have for Lumax Auto Technologies in the aftermarket space. Lumax Auto Industries would only be supplying certain lighting products, which basically would be non-conflicting with the OEM.
Okay. Sir, my next question is related with the plastic parts business, especially for the four-wheeler side. You are setting up a plant in the Bangalore. So just wanted to know what is the progress now and how would be the asset turnover of this plant?
Vikas, can you share some light on the four-wheeler business of Bangalore?
Yes, sir. So this Bangalore plant actually is a brownfield expansion. Currently, we are doing the two-wheeler molded parts.
I'm so sorry to interrupt you, Mr. Marva. Your audio is not very clear, sir.
Can you hear me now?
We can.
Okay, so Vikas, I don't think you're audible, so I will take that question. I think the brownfield expansion is primarily to cater to the passenger car. I think Bangalore plant largely has been catering to the two-wheeler space so far, but the brownfield expansion is to cater to the four-wheeler plastic products, mostly kinematic products, and to get a higher contribution per vehicle. Your question on the asset turns, well, brownfield expansions historically have been a much more better financially feasible compared to a greenfield one. So we do expect, I think, this particular plant right now as a 1:1 asset turnover. I think we do expect it to go up to possibly 1:1.3, 1.5 in the coming 1 or 2 years.
Thank you. I would request Mr. Jain to rejoin the queue for follow-up questions. The next question is from the line of Apurva Mehta from AM Investments. Please go ahead.
Yeah, sir. Congratulations on good set of numbers on this type of. Just wanted to ask about this new JV, Alpine, and what is the product profile and why such JVs that we have so many JVs now. We are adding one more JV. So can you throw some light? What is the capex program, product profile, and how excited are you on this JV?
I'll take this question. Thank you very much. See, the Alpine, first and foremost, is a global player which is having a revenue of about $8 billion almost. Now, if you see it in our joint venture partners, you rightly said there are multiple joint ventures which we are having, and this is the company's ethos that if it is fitting a company or customer need, we would actually go ahead and actually capture that opportunity, although it may take some more time for realization of those opportunities depending on the market dynamics. Now, Alpine, I think, could be one of the key cornerstone joint ventures for the future of Lumax Auto Technologies. If you were to see in the Lumax group, we have probably this would be the largest joint venture partner in just terms of revenues. Also, we're very excited because if you see our press statement, the product category is something which is extremely futuristic, specifically also when the whole mobility transformation is changing. Anmol just had talked about the strategy to talk about EV or case connected cars. We are fundamentally going into the sensorization and the electronification, which as Alpine is a leader in globally. So they do basically manufacture components which would cater to this product line. Since it's a very recently signed joint venture, we are still in the process of feasibility study, which we expect to complete in the next quarter with our customers. But as already have in its product category, the customer, which is one of the largest customers, which is Maruti Suzuki. So we will be closely talking with them and other basically customers also, Japanese and non-Japanese. So once our business plan scenario is complete within the next quarter, we would be able to share some more details on it. Thank you.
And can you throw some light on, the JVs which we are having that about sensors and, York and Uturan and where they stand? Because last few years we are seeing that mostly these JVs are not performing or, getting into losses. And I know they are long-term stories, but if you can just broadly, know where they stand now and what is in next 2 years, what is going to happen, starting from the sensor FAE.
So, Apurva, I think how I put it is that if you look at the joint ventures and subsidiaries put together, they contribute roughly around 20% of the consolidated revenues today. Yeah. I've always maintained that in our midterm plan of, let's say, 3 to 5 years, we do expect that the joint ventures and subsidiaries would possibly garner a 1/3 share of the total consolidated revenues. Thereby, clearly, the joint ventures will grow at a faster rate compared to the standalone entity per se. And again, depending on the joint venture, for example, Lumax Mano is a mature joint venture. It already has attained a market leadership position. So in the future, we do anticipate growth coming from a technological shift, which we have already started seeing in the past couple of years. Lumax Cornaglia, I think only in the last year with the introduction of the urea tank, it has made significant progress in its contribution to the overall revenues. And we do expect to continue penetrating this space of the emission critical plastic molded product and driving growth for the group as well. So we do not anticipate, we anticipate Lumax Cornaglia to be on a high growth trajectory because of also the small base. Lumax Metallics and Lumax Spy, I think this subsidiary and joint venture are fairly recent, and I would say it would be right to say that we may not have achieved the full potential of these joint ventures, but we are still in deep discussions with our customers, and we are still hopeful that both this subsidiary and the joint venture should start contributing to the overall growth of the company in the next 1 to 2 years. Apart from this, of course, as Deepak had mentioned, the new joint venture, we're right now still conducting feasibility, but this is in line with our strategic intent of getting better and a deeper footprint in the electronic space. And Alps Alpine being a global giant and already having a business relationship and revenues with Indian OEMs, both in four-wheeler and two-wheeler space, we do expect that this JV will be up and running from the first year itself rather than waiting for new orders to kick in. And I think the scalability of this JV will be a lot more faster than traditionally what we have seen at Lumax Technologies.
Great. Sir, and on the Ituran front, then we had one LOI with some global OEM. So where it stand and what, when can it materialize and when can we see some kind of, revenues from that too?
So the global, we have already achieved the LOI and it is right now in the development stage. We do anticipate in FY23 revenues to kick in, and it is a strong order. It's almost about close to 20 crores plus per annum business, which is a sizable one for this associate company.
Okay. And the new order wins of 120 crore. Can you throw some light where these orders are and in which segment they are?
So the new order about 120, largely almost close to, I would say 60% of it would be in the plastic space. Again, you have to understand the synergy between our long-term plan and our quarterly order book. So as I said, electronic and plastics continue to be the main foray for the company. So almost 60% of the new order book rests in plastics. Apart from that, there have also been some significant wins on the metallic chassis, where we have penetrated to the premium biking segment of Bajaj Auto. We were already on the export models, and now we are also going to be supplying to the premium KTM range. And also the telematic win, which I had just mentioned to the tune of 20 crores, is one of the key order books. Apart from that, even the lighting and the gear shifters continue their organic wins for new orders.
And your outlook for this year, which you are targeted around 30% growth, we still stand to that, where we had a little weaker Q1. And so we still hope that we can achieve this 30% kind of growth for the year?
I think it would be appropriate to wait and watch for Q2, and still there is a lot of volatility. But I think given the performance of the last 45 days, I am pretty hopeful that if the similar momentum were to continue, we would definitely be able to outperform the industry. As per SIAM latest estimates, the industry is likely to grow anywhere around 15 to 18% for the full year. So given our track record of beating the industry estimates, I do expect maybe upwards of 20% growth for the current year, but I would be able to throw some more light on it maybe at the end of Q2 call, please.
And any update on the semiconductor side where we are, listening a lot of buzz from that there will be 10% kind of production cut overall for the year, and any update on that, and if you can throw light on that, are we going to be affected from that end also, or we are not affected?
So let me take that question. I think from a semiconductor industry point of view, I think it's still very, very early to say how much annually the industry would get impacted. I am aware that some of the companies have made a statement. However, as an industry, I think the formal statement has still not been out. The semiconductors remain a challenge. I think our company is fundamentally not having so much dependence on either imports or also exports. And hence, I think it's pretty much localized solutions which we're using. Of course, the risk does remain if basically the OEM schedules do change. And we are closely in touch and monitoring very closely all our major OEMs, what basically fluctuations will come in. Also, you have to understand that in the two-wheeler space, the impact of semiconductor shortage is relatively lesser than compared in the past car. As well as in past cars, there are certain OEMs who are more impacted than others. So we don't see any adverse impact on the company's performance due to semiconductors.
And also, Deepak sir, can you throw some light on the EV front also? What is your view and how this, all the, where the two-wheelers are going and where you see India to move on the EV side?
Well, my view is, what Mol just said that, say the EV, of course, the two-wheeler would be an early adopter, given also the fact that there are strong policy governance, both at central and state levels to bring in EV mobility. I think the key part here is that the company is engaged with the major players in the two-wheeler space. As you also know, that all the two-wheelers, current OEMs are also having their EV strategy, which will be helpful for the company when you're doing it. We have also done a risk mitigation on the products which we are currently having, and we don't see any adverse risk in the near future, which will impact because of this whole EV transition. My personal view is that I think this whole EV space will definitely play out a lot more faster now in the two-wheeler space. Also happy to say that we're already engaging with the new age players, which have not been our traditional customers, and we are looking at business opportunities in the EV. In terms of the strategy, I think in the EV space, there is motors, controllers, batteries. I think the company and the group is looking at now lightweighting, basically trends of case in terms of connected, as well as I think the sensorization, electronification, which will also be rapidly adopting in the EV space. I think that's where we would position ourselves and still continue to look at opportunities on localization when basically the EV story is playing. But we are very excited about this, and I think this transition will only help the company to perform better.
So this new JV is all about that only, where we see that playing a critical role on that front?
So you're absolutely right. So if you see, most of our JVs in the last 2 to 3 years have basically been on new tech areas. And, unfortunately, the EV space is still to play out. And it very quickly occupies this whole new opportunity. You have to understand that very clearly. A startup usually takes about 7 to 8 years gestation. We have been trying to do it in 3 to 4 years. And a JV is like a new startup. Also, you have to understand clearly that there are only limited opportunities which will happen for a certain window. Unfortunately, in the last 2 years, whatever JVs we have done, I think also some corona impact has happened, where, say, globally our partners also have been impacted. It's not Indian impact, it's a global impact. But I think as we are coming out of this, we will definitely see a lot more traction. Happy to say that most of the JVs have got a great customer engagement, and at least that's building up the brand on individual JVs per se. So we are definitely very bullish about the future in terms of the strong performance, because that's something where it will give a hyper growth in years to come once basically the new story mobility plays out.
And last question from my side, on the export front, are we, where we have a lot of JVs and there are a lot of outsourcing stories from JVs also, is there any possibility that there can be a big outsourcing story for us also, where we can supply to with the help of the JVs, or we outsource, or we have some products which we would like to export over the period of time? And are we looking at export as our long-term strategy for growth or in this Lumax Auto?
So exports is definitely on the. Go ahead, Amos. You take it.
Yes, absolutely. I was saying that in our long-term strategy, export continues to be a key focus area. And as you rightly suggested and said that, most of our joint venture partners, we are trying to see if through certain cost advantages we could utilize the India's production base for some of their global plants requirements and move the production to India, thereby giving the impetus to the joint venture and in turn also giving certain cost advantages to our foreign partner. So some of those discussions are already underway. We do anticipate that we would be able to perhaps start the export business through our partners first, and case in point is Lumax Mano, where we first attained the market leadership in the domestic market, and today we also are suppliers to certain programs in the overseas market, and even in one of the other joint ventures like Lumax for Naglia, we have recently also acquired some export business for the Indonesian market. So there are already some inroads made, but as a long-term strategy, I think we will be continuing to focus a lot more and increasing our export footprint in the company.
Great. Thanks a lot, and wish you all the best. Thanks.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question at this time. The next question is from the line of Hasmukh Gala from Finvest Advisors LLP. Please go ahead.
Hello, sir. Congratulations for really good set of numbers. Never expected this kind of Q1 performance. Sir, my question relates to mainly our JVs. Right now, as you rightly said, that the revenue is very less. I think all put together, last year they had a revenue of about 230 odd crores. Now, how is the production activity being conducted for these JVs in India? Like, are we importing the major components or in semi-knockdown condition and just assembling here? Or are we into full-fledged manufacturing of the end product also? That is my first question.
So, Hasmukh, thank you very much for your encouraging comments on the result. So, I think on the joint venture, right now, you're right, we did almost about a 250 crore revenue last year.
Yeah.
Majority of the revenue is highly localized. So we do not have a very high dependability on import content across our joint ventures. Most of them are locally, not just assembled, but they, in a sense, fully manufactured locally. Lumax Mano, for example, is a full service supplier where there is a very high penetration even on the R&D and the design segment. So we are literally a full service provider of gear shifter systems to our OEMs. I think largely because these joint ventures have taken a long time in achieving a certain threshold of revenue. That's the reason why you still see that overall company as a whole, we're still at about 20%. Also, certain joint venture partners, the strategy or let's say the common intent for the Indian market took some time to synergize and balance out. But I think in the last couple of years, we have had a realization that going forward, we would like to partner with technology partners who are again already achieving a certain leadership position and have a strong focus on the innovation and technology, because that's where we feel is the USP. And hence going forward, our, let's say, joint venture strategy has to that extent perhaps stands slightly corrected and modified in terms of the partner selection and in terms of the area where we would like to focus upon, considering electronics and plastics. So I do feel that going forward, you will see a lot more progress on our joint ventures contribution to the overall revenue. And as I said before, our endeavor is from the current 20% mark to take it to at least one-third.
One-third, okay. Right. The second question is, so how much investment have we made in these joint ventures all put together?
So about 75 crores is the total investments we have made so far in all the joint ventures.
From Lumax Auto side?
Yes, from Lumax Auto, our contribution to the joint venture.
Our contribution, okay. My another question is, you said that capex of the 2 odd crore. So what is our plan for full year capex?
So full year capex plans would be anywhere between 80 to 90 crores. This is what we would envisage. Obviously, the majority of it would go into the Bangalore brownfield expansion, also in setting up the new businesses for the metallic business of the Pulsar and the KTM family. Also certain gear shifter expansions to manage our customer needs. Those would be the key areas of investment. However, 80 to 90 is what we envisage, and I think in Q1 we've done only a negligible 2 to 3 crores of capex out of this 80 to 90.
Right. Now, sir, if you are able to say grow top line in this FY22, subject to all the limitations which you discussed, of say anywhere between 20 to 25, 30%, what kind of EBITDA margin you will be looking at?
So I think historically, if you see, even in the last financial year where we had peaked out on revenues in terms of our capacities, I think we have already started achieving close to 12% EBITDA mark. I think in Q4 we had achieved a 12% EBITDA mark, and our endeavor would be to first kind of bounce back to those levels. Obviously, going forward, as I've always maintained, our long-term strategy would be to enter the teen EBITDA. But first and foremost, I think if we were to get back on our feet and get back to full capacity utilization, we should be able to come back to the 11-12% EBITDA mark.
Okay. And sir, our effective tax rate is still very high, so we have still not gone for the new rates.
Sorry, I could not get that question.
Yeah, our effective tax rate is very high at about 37% in first quarter. In FY21 full year, it was 28%. So have we not gone for the new rates so far?
We have gone for new rate because of the deferred tax. It is like that. So the full year, we are expecting the tax rate would be around 28-29% for FY22.
But we have not gone for the new rates.
Yeah.
Okay, fine. Thank you very much. Wish you all the best.
Thank you. The next question is from the line of Nirmal Bari from Samiksha Capital. Please go ahead.
Yes, sir. Thanks for taking my question. Yeah. Am I audible?
Go ahead. Yes.
Yeah. So the first question is on the current quarter. What was the revenue loss as compared to what we were expecting?
So the first quarter revenue loss would be close to about 25 working days, which in result translates to about a 75 to 80 crores loss of revenue.
Okay. So if we had this and at a similar gross margin level, then our EBITDA should have been closer to should have been higher by about 75 to 80 crores on that 30%.
Well, if you look at our Q4 performance, was 388 crores, but Q4 is historically a key quarter because there's a lot of pent-up demand. So, I would say that yes, if things were to go right and no COVID effect, then we should have looked at maybe a 330-340 crore revenue mark for Q1.
Okay, fine. The second part is on the gross margin. So, what we have seen for the OEMs as well as the a lot of companies is there's a lot of pricing pressure that has come in, which has impacted gross margins for all these companies. So in your case, the gross margins have remained intact. In fact, sequentially there's been an improvement. So why is that? As in, are we seeing cost pressures and are we able to pass on the entire cost pressure? First is that, and second is going forward also would we be able to maintain similar margins in the next few quarters?
So yes, first and foremost, I think our gross margins, if you see historically over the last 3, 4, 5 quarters, they have always maintained around the 32 to 33% mark. We do see certain escalations on the raw material side, but our largest customer is Bajaj Auto, contributing almost 1/3 of the consolidated revenues. and we do have very clear understandings with most OEMs on a back-to-back raw material settlement in terms of the prices. There may be a lag of 1 quarter based on the actual realizations, but most of our OEMs do compensate on the raw material escalation. So we don't see any concerns on the gross margins going forward.
Okay. And how are the cost prices panning out in terms of in the current quarter? Because we have been hearing some stories about steel prices again, as in steel companies again asking for hikes. So for our product basket, which is plastics and metals and all, how are we seeing the pricing at present?
There have been some price movements on the upward side, as I mentioned, both on the plastic side as well as on the metallic side. But most of the OEMs, as I mentioned, do understand the price escalations. In some cases, they settle these prices themselves, and in most cases, they do compensate us for all these escalations. So again, I'm not so worried about the raw material escalations because that is a back-to-back arrangement with most OEMs. However, of course, with the loss of the revenue, there has been a loss on margins because of certain fixed costs, and going forward, we do expect to correct that as well, so that we become a little more agile and flexible in our cost structures, in our internal cost structures, making the company a little more healthy and robust going forward.
Okay. And my third question is I heard that you said SIAM is targeting about 15 to 18% growth, and so we are expecting around 20% kind of growth. Is that correct?
I did not say we are expecting 20% specifically. I said we are usually fared better than the industry. SIAM did last revise it to 15 to 18%. I will let Deepak maybe validate that. But if we see the current momentum of the last 45 days to continue without any so-called third wave, which we keep hearing about, we do expect that we should be doing a decent growth of beyond 20% is what I mentioned.
Okay.
Yeah, just to come in, I think it's very difficult to actually predict an industry growth. SIAM would keep on revising it based on quarter performance as such, but clearly we are seeing a good, I would say, demand post the lockdown. It's the third time it's happened. So I think that's what gives industry the confidence that once the lockdown is uplifted, there is a short-term spurt on the pent-up demand, and still the demand remains healthy. Now, within their segments, there would be different performances. But given the company's business plan, as Anmol has just mentioned, we definitely would do better than what the industry performance would be, given multiple dimensions of Lumax Auto Technologies.
Yeah, that was just to confirm, because a 20% growth rate would mean only 3% year-on-year growth for the next 3 quarters, since Q1 last year was a complete washout. So anyway, and my last question was on Alps Alpine. I'd asked this earlier in a meeting as well, but have we decided on the product portfolio over there, or what kind of capex we would be incurring on that side, or those are plans work in progress at present?
Those are work in progress.
I'll take that question. Number one, on the 20%, I just want to correct you. I think when we're talking about a 20%, we are talking about the full year 20% and not just the next 3 quarters at 20%. So it also takes into consideration the downfall of Q1. So if you compare on a year-on-year basis, we are talking about a 20% on a full year FY21 vis-a-vis FY22. Number 2, on Alps Alpine, I think as mentioned earlier, the product category is broadly electric components, the sensorizations, etc. And they also have a key player in the switches business with supplies to certain OEMs in India currently. Right now, I would be not able to comment on the capex outlined because the business plan feasibilities and customer engagements are still on. But I do hope that in the subsequent quarters I can shed some more light on it.
Okay. And just to clarify, I had assumed 20% growth over FY21 in FY22, and based on that, it comes that for the 9 month of that is Q2, Q3, Q4 of FY22 versus Q2, Q3, Q4 of FY21, that would mean a growth of just 3% for those 3 quarters. That was what I was coming to, with a 20% growth.
Sure.
Okay, thanks. I'll fall back in the queue.
Thank you.
Thank you. The next question is from the line of Rakesh Jain, an individual investor. Please go ahead. Rakesh Jain, your line is unmuted. Please go ahead with your question. We would request you to unmute yourself from your mobile and go ahead with your question. Due to no response, we'll move to the next question. The next question is from the line of Ayush Oberoi from Victor Delta Securities. Please go ahead.
Thanks for the opportunity, sir. I have a couple of questions. The first one is that government has announced update on scrappage policy. So how much beneficial it would be for us?
I think the scrappage policy, what the government just very recently announced, I think from our perspective, I think we still need to evaluate in the long term. We are not in our business plans with any uptick because of the scrappage policy.
Okay. So the second one, what was our overall capacity utilization during Q1 in standalone operations and at JV level? Hello.
Sorry, can you repeat that question?
Yeah. What was our overall capacity utilization during Q1 in standalone operations and at JV level?
I'll let the finance team answer that.
Sure.
Ladies and gentlemen, we lost the line for the management on the line. I will just request you to please continue to hold while we call them back.
So I can take that. I think from a Q1 level, say our capacity utilization is better in terms of about almost close to 70% plus. This is for our existing product portfolio. On our JVs, we are still, apart from Lumax Manno, which is a mature JV, and Lumax Cornalia, we are also running at about 70%. However, if you look at in terms of the new JVs formulated, that is very that's almost about 20% or so.
Okay. And another part is, how is the demand momentum in the month of July and August?
Very well. For us, July and August have been very significant, steep improvement, actually pleasantly so. And it kind of reflects on what basically Q4, probably a month-on-month performance, if I see. So I think July, August looks good, for which I think we are pretty much on the ramp-up mode now.
Good. And the last question, the battle against the increased cost of commodity, do we have any plans to control further operating costs to improve margins for current fiscal year?
I think there was also a similar question prior to this. Commodity price increases would be a continued trend, even in the future, or at least foreseeable future, given the supply-demand disruptions. I think the company, based on the contracts with the customers, are pretty much in confidence that we would be able to actually pass on and at least kind of protect ourselves on a very steep commodity price increases. Also, the company is looking at and it's been consistently doing cost reduction programs internally and improve our efficiencies, which also gives that we've been able to intact our gross margin. This will be a continuous trend over years.
Okay, sir. That was very helpful. Thank you for the opportunity.
Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Well, I would like to thank you all for joining into the call. I hope that we were able to answer all your questions. For any further queries, you may please get in touch with us or SGA. We will be happy to address all your queries. Thank you and stay safe and stay healthy.